All right. I hope everybody's having a great Friday, getting ready for the weekend here personally. Today's a big one. This is going to be exciting. I'm excited for this, and I know you guys are too. We're going to have CleanSpark Executive Chairman Matthew SCHULTZ on the channel for a live interview. So this will be another first for the Bitcoin mining space and the retail investing community. I know companies have done fireside chats and things like that with Wall Street analysts, but doing something like this live is a first, and it's special. You know, I first interviewed Matthew SCHULTZ. It was over 4 years ago now, and it's just crazy to see how far the company's come, and even just how my growth has come along with the company, and how the channels continue to grow as well. A couple of notes to take care of. First is, unfortunately, the only piece of bad news is we won't be talking about the warrant conversion issue. The company hasn't put out any public comments on it, so Matthew SCHULTZ will be unable to discuss that publicly. I hope you guys understand that. I know it's a little bit of a bummer, but I'm assuming we're going to get clarity on that from the company here sooner than later. It looks like the markets are bouncing back here at the end of the day, so that's a good thing. Maybe they're excited about this interview. Bitcoin's back above $91,000 all of a sudden. CleanSpark's at 1405. It's green on the day. Hey, that's a nice little change. But the Nasdaq's on a 5-day losing streak now, and we haven't had a 6-day losing streak since I think 2019. So it's been a while. So there's been a lot of headwinds that the Bitcoin mining space, Bitcoin itself, has kind of fought against, and it's just makes you wonder what Bitcoin's going to do when the rest of the markets cooperate with it. Really excited to have Matthew SCHULTZ. One other note I need to make is the chat is going to be in members only mode. And I'm going to get this started off. I'm going to gift 10 memberships here, if I can do this right. To some of you watching this that might not be a member already, if you want to chat and ask questions, it's like $2. I think it's the cheapest I could make it. I just did that to control some of the emotions in the spam. So I'm going to go gift 10 members right now. If I can learn how to do this. I've never done this before. Membership gifting. Let's go 10 memberships. And then just in just a few minutes, I see Matt SCHULTZ is backstage already, ready to go. So I'll pull him up on stage here in just a little bit. So 10 free memberships coming in hot to 10 of you lucky people that are watching this. I hope you guys enjoy that. And if you are a member, make sure you leave a comment or question. Matthew SCHULTZ is always open to comments and questions from the retail investing community. So I'm excited. I'm excited for this. What time do we have? Is it almost 2:30? No, it's 2:25. After this, I only anticipate this interview lasting about 30 minutes. I have some prepared questions that I think are on the minds of all of us. And then I'll get into some questions that are asked from you guys in the live chat. So that'll be the last 10 minutes. And then tonight, I got to go coach a high school football game. The local high school, if you guys didn't know, I helped coach basketball and football there. We're 11-0, undefeated. It's the best season we've had since the year I was born, 2001. So it's kind of crazy. It's fun to be a part of. And if we win this one, we go to the state championship, and we'll play at Memorial Stadium. So to be cognizant of Matthew's time, but also I got to go do some things. This live stream will only last about 30 minutes. But let me switch back here, and I'm going to pull up Matthew SCHULTZ on stage, and this is a new software for me, so just give me a moment. I'm going to add Matthew SCHULTZ to the stage. There he is, and I think we should all be able to hear him now.
Hey, can you hear me okay, Ben?
Yep,
I mean, RexFinance, my apologies.
No. That's all right. How are you doing today? I know you just got back from Miami, was it?
Yeah, I'm doing really well. Thank you for asking. This is it's exciting. We I think our first chat was what, 3 or 4 years ago?
Yeah, over 4 years ago. I think it was August of 2020, if I remember right.
That's awesome. Congratulations on all of your success. It's been fun to watch your channel grow and see you go from a high school kid to a college grad to a successful entrepreneur. So congrats.
No, thank you. You've played a big part in my journey, so I can't thank you enough. I know we have at least one watch party going on today at the local high school. I know they have a personal finance class or some sort of finance class that's tuned in. So this is going to be a very basic, generic question for you. But how would you explain what you do to a high school freshman in a way that makes sense in their young brains?
Oh, that's a great question. I actually, I have kids myself, so I get asked that, ironically more by the parents than the kids. I think the kids have kind of figured it out, but Bitcoin is a digital currency. So unlike a paper dollar, it exists in digital form. And if I was to send a Bitcoin to you or you to me, that process gets verified through a public ledger, the Bitcoin blockchain. And so what happens is miners like CleanSpark, we own computers and we do thousands of calculations, and we're basically solving a random contest. So our fleet is about 31 exahash. So to put that in context, 1 exahash of processing power is 1 quadrillion guesses per second. So we have 31 exahashes. So it's 4 quadrillion per second. So 31 times 4. So it's a huge number, hundreds of quadrillions of guesses to solve a random puzzle. And when we solve that puzzle, or whoever solves that puzzle correctly, they get the right to add the next block on the blockchain. And that block contains transaction information between whoever's sending and receiving or buying and selling. And in exchange for that, we get paid in a block reward. So we get a number of Bitcoin for solving that transaction. That's a fixed number. And those blocks are every 10 minutes. And then whatever transactions happen to be in that block, there's a fee for sending that, just like the fee that you would incur by using your Visa card at the gas station. So there's a fee, and the miner that solves that block is also entitled to those fees. So to kind of simplify it, we just process data. But it does a couple of things. It keeps the blockchain secure, and it's decentralized. So there's no CEO of Bitcoin. There's no board of directors of Bitcoin. It's really governed and run by the people. And that enables it to not be sovereign. It's not tied to any currency. It's not able to be debased. It's a hard cap supply. There will only ever be 21 million Bitcoin, which is, I think, why we're starting to see the kind of rapid appreciation that's taken place over the last week or so as the administrations have changed and the US has developed a bit more friendly tone on Bitcoin. We're starting to see people recognize that this is a real treasury reserve asset that it is limited, unlike US dollars or euros or whatever fiat currency may be out there. So does that kind of explain it the way that you would like to see it explained?
No, yeah, absolutely. I think the simplest way to put it is you get rewarded for making sure transactions are secure, right?
That's pretty much it.
So I just want to shout out Chad. He just gifted 5 more memberships, by the way. That's awesome. Thank you so much for that. You mentioned kind of the political change that's taking place in our country right now, and how it seems like the political realm has kind of been a headwind for this industry. But now all of a sudden we had hundreds of pro-Bitcoin, pro-crypto representatives and Senate members just elected this previous election. It's our first ever pro-Bitcoin and pro-crypto president in our nation's history. What does that mean for this Bitcoin mining industry? Like what type of acceleration do you think we're going to see in the adoption of Bitcoin? Like, I know there's been a proposed Bitcoin reserve, for example, in Pennsylvania, and then there's been talk of a national Bitcoin reserve. Does that excite you?
Yeah, it's the argument for Bitcoin is that the value is really kind of arbitrary. It's not tied to any one currency. It's really driven by the basic principles that you learn in Econ 101. It's supply and demand. And the cool thing about Bitcoin is it consumes energy, a lot of energy, in order to validate those transactions. So the energy consumption, we were energy guys the first time you and I spoke, and Bitcoin was fascinating to us because the energy consumption, we kind of view it as a feature and not a flaw, because it enables us to monetize stranded assets. It enables us to do a lot of different things encourage new renewable energy generation, et cetera. But it also stabilizes the grid. And so Bitcoin mining is really a valuable tool for utilities. And so the prior administration looked at it just wrong. That's my opinion. But Senator Warren talked about that she had conducted or enacted a war on crypto. She talked about the fact that, crypto's use case was for illicit or nefarious activities. And, you listen to anybody from the Department of Treasury, they'll tell you the exact opposite, because Bitcoin and crypto are public ledger. It's much easier to find and identify people that are acting inappropriately with crypto than it is with the good old US dollar. So I think I know the current administration is a big advocate and proponent of Bitcoin for a number of reasons. Ben, I grew up a lot like you, your neighbor, in fact, in a little town in Wyoming. And, I've had the opportunity in the last year to be around President Trump on a couple of occasions. The first time in June, there were, a dozen or fewer of us that were invited to sit down in the tea room at Mar-a-Lago and talk about what Bitcoin means and how it could strengthen the U.S. economy as a reserve currency, how it strengthens the power grid, how it enables us to kind of front run the demand for high performance compute, because I can build out, as you saw in Sandersville, Georgia, I can, take a piece of land and go soup to nuts from 0 to 150 megawatts of fully constructed infrastructure and operating in 8 months. We closed on the Wyoming transaction in June, and we fully expect to be hashing there in December. So the idea that we can get ahead of, the demand for high performance compute, which takes 5-6 years to build out, we can really blaze a trail on stabilizing the grid. There's a tremendous use case in Bitcoin as a store of value, as a hedge against inflation. And kind of an interesting stat that Zach shared at one of our presentations, 70% of the transactions on the Bitcoin blockchain under $100 either originate or terminate on the African continent. And
Wow.
That's really proof positive that it's actually enabling the unbanked to have access to global economic networks and financial systems. So it's just such an exciting time to be alive. And I think, to have been blessed with the opportunity to sit down with President Trump and say, he asked the questions. How does this work? How does it work with the energy grid? Talk to me about this. Talk to me about that. And this was in June. And what they were really trying to understand was, is there a case for for Bitcoin as a treasury reserve instrument? Is there a case for Bitcoin mining as a balance to the grid? They ask all the right questions. He wasn't working from a script. He didn't have notes.
Awesome.
We were talking about Tennessee because at that point we had just started the grid transaction, and we were telling him about the value that we brought to the state of Tennessee. And he grabs one of the girls, hey, Bailey, or whatever her name is, can you see if Bill's here? And so she runs out and she comes back and brings in Bill Haggerty, who's the senator from Tennessee, who also sits on the Bank and Finance Committee, has him sit down at a table, asks him questions, has him interact, talks about the value that he sees Bitcoin mining as a senator from Tennessee, talks about that TVA, the Tennessee Valley Authority, is the largest utility in the nation, talked about how important Bitcoin is as a currency and a commodity. So, to be in that environment, real world, and to have, the ability for our team and other miners to have impact on those decisions at a policy level is just, kind of surreal for a Wyoming kid to even have that kind of opportunity.
Yeah, that is crazy to think about. I mean, you've taken pictures with Donald Trump, and it just has to be so nice to all of a sudden have, it seems like, the political realm on your side. You mentioned your grid acquisitions, and it seems like, and I've been following your company pretty closely, it seems like for the first time, I would say you guys have you're long infrastructure, and you're also long rigs right now. You have plenty of infrastructure in the pipeline that you can build out. You have, at least to my knowledge, enough rigs to keep deploying those rigs without having to make additional mining rig purchase orders. My question is your mindset now going from one of being hyper acquisitive during that bear market to now we're going to spend our resources to build out the pipeline that we do have using the resources we have acquired?
I would say the answer to that is C, all of the above. You know, we hear an increasing number of our peers, especially before Bitcoin went on this little parabolic run, talk about, you know, AI is better, AI is better, AI is better. And so there's, you know, we really see that as a shiny key. A lot of the infrastructure built for Bitcoin mining is really not sufficient for high performance compute. It's not compatible. The energy profiles aren't compatible. It doesn't make sense. So we really feel like it's more of a, you'll note that most of the companies that talked about a pivot to AI are the companies that have a less efficient fleet. So from our perspective, if they want to unplug machines and plug in H100s and do high performance compute, you know, I'll drop my number in the chat and they can call me. I'll help them unplug the machines because that decreases our difficulty and increases our market share. So I see truly that you're going to see obviously this kind of run to 90,000. Well, I don't think was on anyone's bingo card prior to Christmas. I think, you know, everybody saw that by the inauguration, $100,000 is probably likely, but this has been kind of, you know, an outsized run. So I think, you know, you're going to see difficulty go up a little bit. A lot of the miners that weren't profitable are being plugged back in. But, you know, as there's volatility in the market and difficulty increases, we're going to see those less efficient miners unplug. We're going to see a continued pivot towards AI. So the companies that have great infrastructure, but have a fleet of miners that are consuming power at, you know, 30 joules per terahash of processing, and ours is, you know, at or below 20, they can't compete at the same level of efficiency. I mean, using public information, Ben, last quarter, we mined Bitcoin at a 57% gross margin. There are companies that bought Bitcoin because they couldn't mine it profitably. So there's a big differentiator. So those companies, they have the right infrastructure. They have the right facilities and the right power. They just don't have the right rigs. So as they look to, you know, refresh the machines for the cycle, the question becomes, do we invest tens of millions of dollars in rigs? Because this is now a fully industrial operation. You can't compete at a private scale anymore. I mean, this is industrial scale. So you have to ask the question, you know, if I'm a miner like any of the smaller ones we bought, you don't have the capital to buy direct from Bitmain or Canaan or any of the other miners. So you're gonna have to buy from a broker, which means you pay a premium, which means your payback periods are longer. So now you've already got your money back out of your machines. You made a little bit of money. Do you flip that asset to a company like CleanSpark and hold on and you know, maybe take the money and invest it in Bitcoin or invest it back into another miner? And I think that's probably the more likely case. So I'm optimistic that there will be continued opportunities to acquire. There will be we have tremendous pipelines in Tennessee and Wyoming that we're very excited about. We are long miners, as you mentioned. We have among the most efficient fleets. But you know, as everything we do, it's kind of strategy over ideology. We didn't just scrap the S19 XPs that are at 21 and a half or whatever watts per terahash because it doesn't fit a profile. We'll continue to operate those until they're, you know, no longer profitable for us at the level we like to see, and then we'll sell them into the secondary market, which we've been very successful at, and then continue to refresh and increase our efficiency. So I don't mean to go long, but I think you're going to see us continue to be active in the acquisitions. I think we're going to be, you know, continue to be active in fleet upgrades. And I think, you know, obviously the greenfield stuff with, you know, Duncan and Chris and their team, they're very, very aggressive and have developed a tremendous reputation in the industry, working with the utilities and the small communities, such that, you know, we're now invited in the front door instead of, you know, trying to pry our way into meetings where we're not wanted.
Yeah, no, great answer. I heard Gary, the CFO, at the AIM Summit, his words were, everybody talks about how being an acquirer is just kind of a wave. It's a wave of acquisitions here in the bear market. But he turned it around and said, for CleanSpark, for our company, it's not a wave, it's more of a constant. And I have full faith that you guys can continue to find those accretive deals. I do just want to bring up a tweet that I put out the other day, kind of talking about some stuff you mentioned with, as Bitcoin explodes, the hardware payback period on previous rig orders and infrastructure decreases significantly for miners like CleanSpark and Mara. And that dynamic just doesn't exist in high performance computing and in AI. So I think my viewpoint on HPC AI. I might be a little even more extreme than you are with it. I think it's just concerning to me. AI and HPC spend has gone from 0 to 100 super quickly. Yet, right now we're in a time period where AI HPC spend should be really peaking. Yet we have a distinct lack of difference-making contracts being signed by the Bitcoin miners that have shifted their business models into HPC and AI. So I don't know. Those are my thoughts there. Do you have anything else you want to add to that HPC AI segment? Because I know it's a hot topic right now.
You're right. I think you can't realistically argue with the people that are pushing that narrative. I'll send you, after we hang up, if you'll remind me, I'll send you a link that you can share. But BitOODA, OODA, their analysts published a research study that showed the rental rate per hour for an H100 processing high performance compute. 8 months ago, it was over $8 per hour for that capacity. Today, it's under $2 per hour. So we were just at a dinner night before last. Zach and I were there. Fred and Salman from Marathon were there. Michael Saylor was there. Benny from Riot was there. TerraWolf was there. There were all the big players were at this table. And we were talking about this very discussion. And the thing that was really evident, and I actually made the comment, Microsoft in their last reported fiscal quarter spent more money on HPC CapEx just last quarter, $72.5 billion, than the combined market cap of every miner at that table. So to think that, a $500 million market cap miner can somehow get, a substantial long-term foothold in HPC is not realistic. But more importantly, you have to look at the credit risk, because if I'm looking to put a large language model kind of inference model out and develop this result, I'm more likely, if I'm a big company, I'm likely to partner with a hyperscaler, which means the companies that are engaging with, converted Bitcoin miners are probably more startup, pre-revenue. So we have these, massive contracts, $1 billion, $2 billion, $5 billion, $23 billion from companies that, really have existed for, a year or 2 years, non-public. So you have to really kind of analyze and assess the counterparty risk. And so for us, Bitcoin is our counterparty. I don't have a customer. I don't have any MSAs I have to adhere to. If my uptime goes below 98%, I don't have to refund all of the AI fees or all the hosting fees that I've charged over the last year because I didn't meet the stipulations in an MSA. I don't have customers. I have the perfect business. So, for us, we really see it again as a shiny key for a lot of the companies that, have great infrastructure, but maybe have the wrong rigs and can't compete in Bitcoin mining effectively.
Nope. Yep. I agree with you about all that stuff. There's a lot of, and I got to shout out Brad. He gifted a membership as well. A lot of generous donors today. But there's a lot of talk in the YouTube chat right now, kind of in regards to dilution. And I assume you knew this question was coming. You get asked it in every interview. It's a hot topic. It usually pops up when miners are underperforming. So twofold. Are you looking into ways to potentially monetize your huge HODL balance? Because that seems to be one area where you could potentially raise some funds outside of the equity markets. And maybe it's also explain why right now you feel that raising capital via the equity markets is more attractive than via the debt markets or via selling the Bitcoin you mine?
So great questions. A lot of our peers are using convertible debt to buy Bitcoin. A lot of our peers are using convertible debt to grow their, to use this to offset capex instead of using equity. The challenge that we see is that a lot of the convertible instruments have teeth in them. So, it converts at a certain price. So the investors in converts are generally hedge funds, which by definition means they hedge the position. So they short the stock and then they trade around certain bands. So what that does is it kind of range binds your stock. And, our friends at Marathon had a $800 million convert a while back, and it was only 1% interest, but you'll note they paid off half of it early because it really restricts the range that a stock can trade. So for us, the analysis of what does this do long term for our shareholders, and does that mean we'll never do a convert? Heavens no. I mean, we'll just wait for the appropriate time and opportunity. In fact, at the conference Zach and I just attended, a couple of the big banks said that they've done converts for a number of our peers, and that the demand for CleanSpark to potentially do one exceeds everybody else because of the liquidity we have, and we're a bit more consistent. I mean, we have this recency bias, Ben. People, like, the stock was $17 a couple of days ago. It's down to 14. I get a message, you guys should all be fired. The stock has performed terribly. Pull a 52-week chart. It's up 300%. I mean, goodness, yes, there have been peaks and valleys, but I think you look long-term at growth. So, to talk specifically about the use of equity, man, I get beat up all the time. Dilution. You guys are so bad. You're terrible. You're killing shareholders. And then, by the way, when are you going to get bigger than Marathon? So you have to look at growth comes at a cost, and we're all shareholders. We're all aligned in our interest. So since we started this, Zach and I have raised, and don't quote me, I'd refer you back to the filings, but in the range of $1.5 billion. Okay. Probably $1.7 billion, somewhere around there. The market cap of the company on Monday was 4.2. So if all of the money we've ever raised is $1.7 billion and the company's worth 4.2, and we paid 300 employees for 4 years, and we have a HODL balance like we do, and $2 billion of assets, clearly the use of that equity has been accretive, right? So we measure that. It's not just some arbitrarily, hey, I think I'm gonna flip some shares into the market because I don't have anything better to do. We're very disciplined and structured in the way we do that. I'm gonna give you a little kind of peek behind the curtain, if you will. A lot of peers in the space, in order to get research coverage from a bank, the banks like to see fees, and so fees come as a result of a transaction. So there are miners, in the top 2-3 biggest miners that have an ATM like we do, an at-the-market transaction. So what an ATM is, they register shares, we put them on a shelf. It gives us the ability to sell those into the market, and it's the lowest cost of capital out there. It cost me 2.5%. So unlike an overnight, unlike even any other type of an equity raise, even convertible debt instrument, it's super cheap. Now at CleanSpark, I'm the guy that trades that. I have a Bloomberg. I look at the depth in the market. We don't trade on down days. We're very disciplined about when we execute those trades. We try and support the market and not impede the growth of the market, but it's a disciplined approach. The contrary approach or counter approach that many of our peers do, in order to get research coverage, they have 5 or 6 or 7 banks on their ATM. So this week it's bank A, next week it's bank B, the week after that it's bank C. And so those banks only realize fees when they trade the ATM. So if, like this week, aside from Monday, the Bitcoin's been under pressure, or the Bitcoin miners have been under pressure, contrary to what Bitcoin's done. But if I'm the bank on, another miner's ATM, and my fees for the month come because this is my only week, in the next 2 months I'm going to have access to trade that ATM, I'm going to be in the market no matter what. So the incentives aren't aligned. So for us, it's a little bit different. We know what we need to accomplish. We try to be disciplined in the approach. We try and be focused, and not be heavy-handed. And so that's where we're at. So, it's the lowest cost of capital. It protects our shareholders over the long term. Debt in this market doesn't exist. To this point, it's too volatile of an asset. The only debt that exists we have, and it's a line of credit from Coinbase. It's a $50 million line of credit. Really what that allows me to do, Ben, instead of raising $50 million through an ATM and then making an announcement, hey, I made a $50 million acquisition, only to see the stock go up after I've already been in the ATM. This gives me the ability to scratch a check off the Coinbase line of credit, make the announcement, the stock goes up, and then I can gradually sell into the ATM to offset or to pay down the line of credit with Coinbase and refresh and do it again. Additionally, you ask about selling the Bitcoin. As I mentioned last quarter, when Bitcoin was in the 50s and 60s, we were mining at a 57% gross margin, which means if I sell that Bitcoin today at $90,000, even just for short term, I'm going to use it to make an acquisition. I'm going to buy it back. The tax on the gains on that Bitcoin, those are sats I'll never recover. So it doesn't make sense to sell Bitcoin right now if I intend to continue to build a HODL balance. But again, we're strategic and not idealistic. We'll sell Bitcoin, as you saw we did. Mm-hmm. Right now, we believe we pivoted June of last year when Bitcoin was in the high teens, low 20s. We saw the market dynamics changing and decided we're going to HODL everything we have. So with the exception of 2 Bitcoin a month that we use to pay vendors that prefer to be paid in Bitcoin, and some expenses that we cover out of it, we hold everything because it's accretive. I can mine Bitcoin at a 57% margin and use a little bit of equity to offset my OPEX. And yet I'm building the value of the company for our shareholders. We think it makes the most sense.
Yeah. So clearly right now, since you keep holding on to your Bitcoin, you feel that the tailwinds are still very, very strong for Bitcoin. Yeah. So for how much longer would you guess those? I know this is entirely subjective. How much longer do you think those tailwinds will last? I mean, is this going to last throughout the whole Trump presidency? Do you believe in the 4-year Bitcoin cycle? I can tell you personally, I don't really believe in perfectly predictable cycles, because any cycle that's perfectly predictable, people are going to front run the top, they're going to front run the bottom, which renders it perfectly unpredictable. That's my viewpoint on that, but I'm just curious what you think about that.
Well, that's why you're doing a good job in what you do, because you understand that market dynamics are never predictable, and that if there's a shortcut, somebody else has figured it out and figured a way to front run it. So, we've always called that this bull market would likely commence somewhere between August and December of this year. I think we're starting to see it pick up. The 4-year cycle, I have historically believed in it, but Senator Loomis, who's become a friend of CleanSpark, she's a senator from Wyoming. She's the one that increased or that introduced the proposal for a Bitcoin reserve for the country, that the U.S. should accumulate 200,000 Bitcoin a year for the next 5 years, which would assure that we have a strategic reserve of about 5% of the total available Bitcoin. We're now seeing rumors online. I think you've probably read the same tweets, that the run from 70 to 90 is because Saudi Arabia and China have pivoted and are likely starting to build strategic national reserves of Bitcoin. If that becomes the case, the 4-year cycle is blown. Everybody's models don't make sense. There is no way to modify supply and say, hey, you know what? This is working out better than we thought. Let's crank it up to 40 million, 21 million. That's it. Yep. That's all. No more. TikTok another block, and the more pressure we see, there's only 1 million left to go. Mm-hmm. So, there are 19.5 million outstanding, 2.5 million lost forever. This is an asset that your grandkids will be asking, why didn't they buy it when it was 100 or 200? My personal opinion, not financial advice, but I really feel strongly about it.
Yeah. Like I said, I agree with that. And, people are asking, very, very short term, why Bitcoin's outperforming the Bitcoin mining stocks. I think it's just what you said. The reason somebody would acquire Bitcoin are very different from the reason somebody would acquire Bitcoin mining companies. You acquire Bitcoin. Sovereign nations acquire Bitcoin as a hedge against economic sanctions from the United States of America. What did we do when Russia invaded Ukraine? We seized their $300 billion in US dollars that was sitting in foreign exchange money. And what are we going to do with it? We're going to take it and we're going to provide support for Ukraine and help them defend in that war. So all these, maybe I'll call them our adversaries, but maybe even in addition to those adversaries, foreign nations are buying Bitcoin as a hedge against economic sanctions in a time period where our world is so volatile. And then you have the hedge against inflation, the hedge against the monetary system failing. Whereas with Bitcoin mining companies, as an investor, you have to be willing to take a little bit more risk. So I personally believe, and this checks out when you consider how the 10-year treasury yield has risen, Bitcoin mining stocks are going to follow risk appetite pretty closely. Now, I believe personally, with all the stimulus coming in from the future president of the United States, the Treasury Department, the Federal Reserve, that risk appetite's only going to increase. But I think it can be the underperformance short term can be assigned to that. People think that interest rates are going to stay higher for longer as a result of all the stimulus, which very well could happen. And this is a very capital intensive business. It takes a lot of money just to be a legitimate player, and that takes hundreds of millions more dollars just to stay relevant. But I went on a tangent there. Do you disagree with me anywhere there?
No, I agree completely. I think there's another layer that maybe you haven't discussed. I'm sure you've considered, but most of the people that subscribe to your channel and most of my friends bias, they learn about a company, they get excited about it, they buy it, they go long. Okay. That's just the way, that's the simplest fundamental approach to investing. Hedgies don't do that, right? So Bitcoin goes parabolic. There's a specific stock that is trading at a premium to Bitcoin right now, and it's MicroStrategy. So all these hedgies do paired trades. So what that means is if you're long Bitcoin and long MicroStrategy, how do you pair that trade to offset risk downside? You short the miners.
Yep.
So this is in my personal opinion, not financial advice, this is a short-term phenomenon. But you look at a company like us that, we're rapidly growing. We've got $2 billion in assets on our balance sheet. We got $50 million in debt. We're operating 99% uptime, and yet, a fifth of the shares in our company are sold short, or even maybe potentially more than that. That is a huge risky gamble, but it's offset. There are pair trades. So, what's in my mind, what's likely to happen is as this run stabilizes and kind of grabs a foothold and continues, I think you're going to see a lot of those shorts begin to cover, just my thesis. But because the exposure in that paired trade with MicroStrategy, the luster is going to fall off that rose. Now, Michael Saylor has caught lightning in a bottle. Nobody can duplicate that. We were at dinner with him the other night. He was making the joke that you guys are supporting the evil empire. You need to sell all your miners, buy Bitcoin, and just sit by and wait. We see the value that we add to the grid. We see access to the blockchain as a real significant value proposition to what we do. I mean, think about what you just said. We seized Russia's assets. Well, Bitcoin is decentralized, but I'm a U.S. domiciled, American flag flying Bitcoin miner. If there are OFAC sanctions that come into place against a nation that's trying to trade on the Bitcoin network, in theory, could the Department of Treasury and the U.S. government disallow me to process those transactions, thereby preventing those countries from access to the block space on the network? The answer is absolutely they could. And the inverse of that is also true. If Joe Biden and Nancy Pelosi and Elizabeth Warren got their way and they offshored all of the Bitcoin block space, what's to allow you or me or anybody else to guaranteed access to the block space on the network? And the answer is nothing. So not only are we stabilizing and securing the power grid, stabilizing and securing the Bitcoin network, we're ensuring block space access to Americans and to our allies around the world, which we think is a critical function. So way off on a tangent about the paired trade with MicroStrategy, but I think you're going to see that come back into the bounds of reality, and miners will certainly start to catch tailwinds as Bitcoin continues to perform. Okay,
so that's an interesting discussion. I know you're just over at the AIM Summit in Dubai, and I'm assuming you met with some powerful players over there that have access to a lot of funds. It seems like you're the hashtag is you're America's Bitcoin miner. Do you have any interest in going international at all? Maybe starting to work with some of those big money managers overseas?
Yeah, it's not, not necessarily about working with the big money managers. I think from a global perspective, we look for opportunities where we can contribute to the power grid, but that we can also meaningfully add hash rate. But again, it's measuring counterparty risk. So you pop up a Bitcoin mining facility in a nation that's maybe lukewarm or somewhat hostile towards us, and you reach a disagreement.
Right.
Where do you litigate that? I mean, you're going to sue the nation state against themselves. So for us, counterparty risk is currently too high in a lot of the jurisdictions. What we're seeing is a lot of the Central and South American exercises have not really proven to be effective. Utility rates, lo and behold, aren't fixed. Transmission distribution costs are higher than we thought. Import tariffs on rigs don't necessarily pencil with what the early models were. So we love the idea that we can go into, Ben, for just simplicity, our business model, we have 26 Bitcoin mining data centers right now. Most of these are like radiator springs. Okay. You remember on cars, it's this booming little town that everything's happening, it's cool. And then the interstate comes by and the town is forgotten.
Yep.
That's kind of where we do business. There was a lumberyard, a sawmill, a cowlin mine, some type of industry in these little communities. So there was power brought in to support those decades or multiple decades ago. And then industry and manufacturing left our country. And these are remote areas that aren't in a close proximity to a major metropolitan area. So the internet didn't arrive. Technology didn't come there. So they were largely forgotten. So we take this opportunity to monetize those energy assets, to strengthen the grids in those towns, to allow them to partner with us on a lot of our utilities, as you've seen firsthand being in Georgia.
Yeah.
And it gives us some of the best power and the best access to power and the most meaningful energy relationships. That's really that kind of touches my heart. I prefer to pursue, small town, rural USA where there's existing energy, and it's, the latency lag would be too great for a hyperscaler to want to compete with me for those assets.
Yeah.
But those electrons are still those electrons, and if those towns can make money, I mean, more power to them. And that's really where we've found a strong foothold. And we, our philosophy is land and expand. Going to Georgia and expand, going to Tennessee and expand, going to Wyoming and expand. And you're going to see that continue as we work with these small communities.
Awesome. So I have a couple housekeeping items. We had a donation come in and they just said, thanks for taking the time on a Friday for this discussion. That's from Brad. And then somebody asked why you keep referring to me as Ben. For those of you that don't know, my first name is Ben. My middle name is Rex. And I've had the pleasure of meeting Matthew Schultz several times in person. So anybody's welcome to call me by my first name. I mean, who are we kidding? And then one other thing, Tim Wolf said he's playing with a Cars toy with his kid, right as he made that comment.
God bless him.
Yep. And then, another thing, this is going to be off topic. We're going a little bit over the allotted time. Sorry. I hope you don't.
I blocked out an hour and a half because you're my friend, so we tend to get long-winded.
Oh, I know.
And I know you got a state championship to contend for, so you be the judge. We can do this again more later if we run out of time.
All right. Sounds good. I appreciate it. Somebody asked for your opinion on the Mike Tyson fight tonight.
Oh, I was going to ask you your opinion. So I'll tell you my thesis, having grown up in an era watching him fight. Jake Paul's big and there's a lot of noise and, it's a big production. I don't think he's ever been hit by somebody that hits like Mike Tyson. I mean, I used to watch fights when it was one punch and it was over. That guy was devastating at 30, and I can only imagine at 60, he's probably still got a little dynamite in the fist. I mean, Ben, when video games, when I was a kid, Mike Tyson's Punch Out on Nintendo 64 was like the coolest thing. You fought all these fighters to get up to the level that you actually got to fight Mike Tyson. I mean, he's legendary. As an old guy, I'm pulling for him, but I guess to be seen. How about you? What do you think?
Yeah, well, I agree with you. I'll root for Mike Tyson. I don't know. Being young is such an advantage these days when it comes to any sort of athlete.
Yeah, when I get out of bed in the morning and my knees crack, I can relate. So,
yeah. Okay. Anyways, let's get back on topic here. I have one last big question for you. And it's in regards to Michael Saylor. You've said you've been in the room with him several times. He's joked with you about selling your mining rigs and just buying Bitcoin itself. I assume some of that is joking, but what do you think Michael Saylor is missing when it comes to the Bitcoin mining space, the advantage you have over a MicroStrategy?
So earlier in my comments, I mentioned that he has the Saylor effect and it's lightning in a bottle and it can't be duplicated. So he literally sat from me to my screen across the table from me 2 nights ago. And next to me, 3 seats down, was Mike Novogratz from Galaxy Digital, who has a Luna tattoo on his shoulder and has continued to hodl Ethereum. So the banter between those guys at the table was comical. But, Saylor was kind of hammering his fist and he's like, listen, Bitcoin's going to go 26% a year for the next 21 years till it hits $13 million a coin. And there's going to be pullbacks and ebbs and flows, but this is what you can count on. And he talks about the value that they're creating and the yield that they're generating off the Bitcoin he buys. And the argument he makes is we do a $1 billion convert by $1 billion worth of Bitcoin, and we measure the yield by the number of sats we hold per share. And the number of sats post-convert per share are greater than the number of sats pre-convert. So that's how he measures yield. They're not actually generating value. The stock price is just going up. Mm-hmm. And so I think that argument is great for Saylor. It's great for MicroStrategy. I don't think it's duplicatable. I don't think Marathon or CleanSpark or Riot could do that same thing. We're not going to get a premium reward. In fact, you look at some of the less efficient miners, smaller scale, that are talking about AI, they hold their Bitcoin for as long as it takes to hit their account, and then they sell it. And there's not a premium. I mean, you look at the increase in share price this week when Bitcoin went crazy. As a percentage, Marathon didn't outpace CleanSpark. You go pull 52 weeks, we're still 100% higher year over year than they are. And they have 26,000 Bitcoin and we have 8,000 or 9,000. So I think the value of the HODL hasn't been fully realized yet. I think we're undervalued by a factor of, I don't even want to go there because it sounds like financial advice, but I think if you pull up bitcointreasuries.net, it shows you the largest Bitcoin treasuries in the world. We're number 7 on that list.
Wow.
That's a scary list to think about, and how scarce and finite this asset is. I think that it's just a matter of time before people realize, I don't want to be too late on Bitcoin. This is a way to get a levered play on Bitcoin with exposure to the underlying commodity without, having to get a wallet or whatever. I think you're going to see miners become very in vogue again. And this whole HPC discussion, with the exception of our friends at Core Scientific, I think most of the other guys are going to wash out.
I would agree with that. And even Adam Sullivan at the AIM Summit, he said there's going to be a downturn for the HPC AI sector. I think he said 2027, 2028. So that's one of the leaders in the space that's saying that. And he recognizes that.
Beside me on the stage when he said that. You're exactly right.
Yeah. So it's interesting. I got another donation, and this will be a fun one, asking you to explain the reasoning behind buying the PJ, the private jet.
Ooh, I like that. It's not like I haven't been abused on that. So a few minutes ago, when we were talking about our size and scale, I mentioned that we have 26 data centers. Now, CleanSpark has among the top 3 most efficient fleets of all the publicly traded miners. We have among the top 3 highest uptimes of all the publicly traded miners. And we have among the top 3 gross mining margin of all the public miners. Now, nobody else has some combination of all 3 of those. There are companies that have, maybe bought a whole new fleet and they have a more efficient fleet right now. But their uptime isn't as high. Their gross margin aren't as high. You understand what I'm saying?
Yeah.
So to maintain that, it requires hands-on. It requires 300 human beings that are constantly touching those miners. But more importantly, it requires guys like Scott Garrison to sit down with the city councilman and the mayor and the Public Utilities Commission and the Department of the economic development directors. It requires guys like Taylor Monig to get on a plane and go sit down with those teams and ensure that we're operating the CleanSpark way. It requires guys like Brad Otis, who, is responsible for every single miner that we own, knowing where it is, when it is, how it is. can you imagine trying to track 200,000 miners across 26 different facilities and multiple different repair labs? So the way we look at it is this. When we were buying Wyoming, I had to get Scott and Duncan and Chris to Gillette, Wyoming. Scott was coming from Atlanta. Duncan and Chris were coming from Vegas. They flew into Denver, took a puddle jumper to Cheyenne, and then drove 5 hours to get to Gillette. So a 2-hour meeting takes 3 days. So you have executives in a company that are really in high demand that need to have access to get to these places as efficiently as possible, need to have the ability to cultivate and nurture these relationships with the communities, with the utilities, et cetera. And so private travel is really the only way. And what I can tell you unequivocally, if you go to the top 10, every single one of them use private travel. You want to know the difference? They use a jet card that's an expense that doesn't show up on their financial statement. Gary's a really smart guy. You know what he said? There's bonus depreciation. If we buy our own aircraft, this isn't a dilution thing. We financed it. We bought down the interest rate. We financed it at really competitive interest rates. If we buy this aircraft, we can depreciate the purchase price. Refer to your accountant. This is not tax advice. We could depreciate the entire purchase price in 2 years. Then we put it into a charter pool. So the hangar and the pilot and everything but the fuel is covered by the revenue generated from it being in a charter pool. So when the CleanSpark team uses this to get to these locations, really costs us gas. And at the end of the time we're done using this plane, instead of a jet card that no longer has value on it that we throw away and it's an expense to our shareholders, we have an asset that we can sell. So this is financial engineering. I know it sounds like, oh, this is frivolous and crazy, but at the end of the day, this is the way that you build the nation's most efficient, highest uptime, best operated fleet. And quite frankly, if Zach and Gary and myself and the board of directors are going to a meeting somewhere, would you rather have the company that you're invested in have the executives on commercial aviation trying to have a material conversation, or would you rather have a bit more security and a bit more discretion? And so these are all a multitude of reasons. It's not about, hey, look at us, we're cool. Everybody that went to the event in Florida this week traveled there on private travel, or I'm not saying everyone, the vast majority of them. Yeah. Some of the people at the table were bragging about it. The difference is for them, it's an expense. For us, it's financial engineering.
Yeah. Okay. And I don't know why this came to my mind, but I have another question for you. We keep postponing the end of this thing. A comment that Fred Thiel made at the AIM Summit was in regards to, I don't remember how he phrased it. He basically said that in the future, anybody using grid power to mine Bitcoin would be mining Bitcoin at a loss or something like that. Curious to hear your opinion on that, and also your opinion on maybe in the future owning your own utilities and energy assets.
Great question. First of all, I consider Fred to be my friend. We exchanged text messages. Fred and I were together last Tuesday night at an event in Florida. Salman, Fred's CFO, I consider a friend. They have their philosophies, theories, and beliefs. I wouldn't dispute what he's saying. What I would refer you to is the fact that they just closed on 2 more or 3 more grid connected mining facilities earlier this week. So I think long-term, is it likely that you're going to partner with generation? Probably so. Is that in the next cycle or 2? Probably not. Your next question is very apropos. A lot of the discussions that we have had and continue to have are with communities that have real estate adjacent to or co-located with substations that have surplus capacity, that are looking for opportunities to use Bitcoin, not as a 24/7, 365 consumer, but as a load balancer. And so you now have access to power at very low, or, I've never seen no, but, decreased costs to provide that valuable asset and load balancing service to a grid. And then the last thing that you said, before we went crazy and started, talking HPC AI and all that noise, I would guess you'd see CleanSpark start talking about investing in or buying small modular reactors and,
Wow.
co-locating, having our own nuclear generation. And this, my perspective, not non-public information, nothing we've talked about formally, but I could see CleanSpark actually investing more. I mean, goodness, Ben, when you and I started this conversation 4.5 years ago, we were in the energy business and I was shoveling coal into a gasifier, and I still have that whole stack of patents sitting right here on my desk. And the device that did that gasification is literally 40 feet beside me in the shop here in Utah. So I see we have a ton of opportunity to contribute meaningfully. And that argument, the gasifier story, still holds true. I mean, to get paid for municipal solid waste and convert that into electricity that can go into the grid and have Bitcoin mining stabilize it when there isn't other demand. I mean, I think it's the perfect storm. I think the future for this industry, but more importantly, the future for this company is something I'm just blown away grateful to be part of.
Yeah, me as well. I don't plan on going anywhere. There's kind of the tend for retail investors to be more traders in this thing. But I mean, I see the long game, and I'm gonna be here with you. You know that I've been here for 4.5 years, whatever it's been. Crazy stuff. So I'm equally anxious to see what the future of this company looks like and how it continues to evolve. I want to say thank you so much for coming on this YouTube channel for this live interview. It was a first for this industry. And I hope maybe we can do it once a month or something. I'm going to have your friend Fred Deal from Mara on in a couple weeks. December 6th, I think, is what we're settling on. So that'll be another good conversation. But I just want to say thank you for hopping on, and thank you from the 500 plus people that are watching this as well for taking the time out of your day to come talk about all this stuff.
Oh, it's my pleasure. And, thanks for having me and for asking the hard questions. And, next time, let's continue the discussion. I heard the disclosure at the front that we can't talk yet about the warrant issue. It's something that we haven't talked about publicly. We're working through some of that stuff. So next time we can talk about that. We can talk about anything else that comes up, but it's my pleasure. I'm grateful to call you my friend, and it's been a fun journey, and I look forward to coming back. So you name the time.
All right. Thank you so much. And I thank everybody for showing up and giving us your time of day as well, listening to us talk. So everybody have a great rest of your day. I'm gonna go try and win a football game really quick. Good
luck. Win that.
Hey, thank you, Matt.
See you, Ben.
See ya.